No massive surprises in the United States on Wednesday as the Federal Reserve left US rates unchanged. On top of that, no more rate hikes are expected for the rest of the year, but one might happen in 2020. At least that's what the policymakers are saying right now. Seung-jae reports.
Following its two-day meeting, the Federal Open Market Committee announced Wednesday that it has left its benchmark interest rate unchanged at the target range of 2.25% to 2.5%. After raising rates for 5 consecutive quarters, the decision comes amid increasing concern about slowing economic growth. Analyzing data released at the end of the two-day meeting, the FOMC expects not to raise rates again at all this year, projects a single rate increase in 2020 and none in 2021. Fed officials had initially expected 2 rate increases this year and 1 more in 2020. At a news conference shortly after the meeting, Fed Chairman Jerome Powell said the Fed expects the U.S. economy to grow at a solid pace in 2019, but will be slower than last year's quick acceleration.
The U.S. economy is in a good place, and we will continue to use our monetary policy tools to help keep it there. We continue to expect that the American economy will grow at a solid pace in 2019, although likely slower than the very strong pace of 2018. We believe that our current policy stance is appropriate.
Powell also did not rule out the possibility that based on the current condition of the U.S. economy, the Fed's next move could be a rate cut. Looking to the future, 11 committee members said they do not expect any more rate increases in 2019, while 4 said they expect 1. None of the members expect a rate cut. In 2020, 7 members expect no additional rate hikes, while 4 expect 1. 3 expect 2 increases, and the other 3 members predict 3 to 4. Analysts believe the Fed will hold rates steady, as Fed officials now expect economic growth of 2.1% for 2019, down from the 2.3% it forecast in December, but warn a downward revision on growth could spook investors. Seung-jae, Arirang News.